Peter, I'm going to start with you. It says here that you're bullish. Is that because we've once again gotten data that indicate to many the recession has ended?
Well, the recession
hasn't ended. If anything, the depression is just getting underway. First of all, it's not a new bull market. It's the same bear market that's been going on since 2000.
Look, I hate to disagree with my new best friend forever, Peter Schiff, but, you know, this is not like the same old bear market since 2000. This is the same old trading range since 2000. This feels very much to me like the Johnson-Nixon years, where for 16 years from about 66 to 82 until Ronald Reagan came in and cleaned things up, we were in a trading range for 16 years in the Dow, and it was a lot worse than a trading range. It was a bear market if you adjusted it for inflation. So it turns out that we've now been for a long time in the Bush-Obama years. We just didn't know it until we were 9 years in. But you look back, nothing's happened with stocks. Inflation is back on the rise. But that doesn't mean you can't have lots of bull markets and lots of bear markets. It's a gigantic trading range. So let's get our definitions straight.
Sure, but meanwhile, as the dollar loses value, you know, we hit a new low for the year on the dollar. You know, the real value of U.S. stocks is going down.
Not on a trade basis. Versus what currency? That's just not true, Peter.
Well, no, the dollar got clobbered against every currency today. But if you look at the dollar index,
but that doesn't mean it made a new low.
Yeah,
it just didn't. It just didn't. On a trade-weighted basis, the dollar is what? 10% off its lows?
It's a new low for the year. The dollar is headed lower.
For Peter, only if Ron Paul is president do we get to declare it a bull market. Otherwise, unless we're on the gold standard and all that other stuff, then every bull market will be a looser.
I mean, I love Ron Paul as much as the next guy, but we can't define bull market that way.
There's no perfect exchange rate. They were all leveraged out. It isn't like, you know, the consumers haven't been working down their debt and all the rest of that.
They've gotten started, but you know, they're nowhere near in good shape.
We've
been on a spending binge for a generation.
So how long does it take for the consumer to get back to where it was?
Spend money for a generation? Come on.
No, we've got to save money. We've got to get our savings rate up to 10 to 20% and keep it there for a long time.
But Peter Schiff, how long is it going to take?
Did you happen to look? Did you look at the GDP data that was released this morning? There was an amazing thing which I want to throw out as a challenge to you. Do you realize that the consumption share of GDP hit all-time highs this last quarter? What that means is that this theory that the consumer is just completely falling off a cliff and will never come back, and we're going to be in 25 years of scrimp and save, has simply not shown up one iota in the numbers. So it's an interesting theory, but as scientists, it's not in the data.
Into a deep look. You can't be in cash and you can't be in bonds, so you got to own stocks. I just own stocks abroad. I mean, I think you got to be in Asia, you got to be in China, Hong Kong, Singapore.
Oh yeah, China.
You got to be in natural resources.
Peter, if America falls off the cliff, who's going to buy all of China's little lead paint toys?
Silver up 50 cents, gold was up 20 bucks. I mean, that's where you got to go.
Yeah, Russia and China, very stable. Great place to put your money.
How about
who is China going to sell their exports to, Peter? Who is China going to sell their exports to?
They're going to buy them themselves. They're going to buy them themselves.
Oh, yeah.
Don Luskin.
I want to know, what is the China story if the U.S. isn't there to be a customer? The idea that all of a sudden the Chinese are going to turn into a consumer society is just simply wishful thinking. There's not the slightest bit of evidence for it. It's an idea, it's a theory, it's interesting, it's a great narrative, but where's the data?
They can buy their own stuff. There's 1 billion Chinese. As long as their government stops buying our bonds and stops suppressing their own currency, you're going to unleash massive purchasing power in China.
That's a big if.
It's not an if, it's a when. It's coming.
They're not going to do that. That's not in their own interest.
It is in their interest.
They've been buying massive amounts of bonds over the last 12 months and have had their exchange rate absolutely fixed against the dollar, and that's why once they stop buying those bonds and let the dollar fall in value against the yuan, we'll export a lot more to China, and they will sell a lot more in China.
What are we going to export? We don't have anything to export. They're going to export less to us, and they're going to consume their products themselves.
The most popular car in China are Buicks, but they won't let us make them there. China is not El Dorado.
Don Luskin, what should people be buying or selling here?
Good Lord. I think the one place where it all comes together, where I think we could actually all agree, is I think on a global basis you should be buying natural resource stocks.
True.
Because no matter what happens, because the United States, we know for sure that we've got inflation in our future, right? I think we can all agree on that. So that's going to be good for natural resource stocks.
In our present,
we know that China is going to keep growing. It's not going to go into a depression. Whether or not it's El Dorado is another question. That's going to put pressure on resources. So the one thing that you know is going to work are resource stocks anywhere in the world.
Banks are overcapitalized. They have more reserves than they've ever had before in their history as a percentage of loans. They're highly liquid. Not close to 10% of their assets are in cash. The companies have increased their market share relative to all other forms of shadow banking. Everything is moving in their direction once this recession is over.
Don Luskin, are you as bullish as Dick Beauvais on the financials?
No, I'm the absolute opposite. I think there are one or two who are going to end up being the beautiful needles in a crummy haystack. But I think as a sector, it's basically wiped out as a growth opportunity. As far as I'm concerned, all the juicy stuff has been taken away from them forever. No more CDOs, no more subprime mortgages, no more SIVs, no more private equity fees. What's it going to be? Free checking accounts in the branches, giving away teddy bears? Come on, this is not a growth industry anymore. This is a regulated utility. Get ready.
That's an interesting take. Dick Beauvais, what do you think about that?
Well, I mean, I don't think that the banks made that much money off any of the products that we just mentioned. They make
they
loans.
Lost a lot, in fact, didn't they?
Yeah,
they took a lot of capital losses, but that's where all the fees were. That explains all their growth for the last 10 years in the bottom line.
Low-cost funds.